Urs, excited to be back on the Swiss View to talk about what's happening in the world and how it relates from the Swiss perspective, really, how things are looking. I think we should dive right in with the big news that Switzerland has zero inflation.
Right. On a year-to-year basis, but also on a quarter-to-quarter, month-to-month.
I think it's quarter-to-quarter.
Quarter-to-quarter, yes. So that is big news. The expectations have been from most economists that it will be a little bit higher, but I mean close to zero. The target of the Swiss National Bank, so they have a target range and not a target like the US or ECB, European Central Bank, where it is 2%. So for Switzerland, the target range is 0 to 2%. And so we are at the very lower bound of that. And the expectations or the worries are that it will go negative. But yeah, we will see where it goes. I mean, the question more is how will the Swiss National Bank react to it?
Yeah, and that's been the big talk at the moment is we're close to zero interest rates already in Switzerland.
Right.
They had risen for a while to curb inflation. That did spike during the I would say post-pandemic era actions.
Right.
But it spiked at 3.4%. It was within its target range in I think about 9 to 12 months, roughly. And the trend has been down ever since it really hit its peak. There wasn't really a time in that trend where it kind of ticked back up. There was a little bit here and there, but that's led to people say, hey, we're trending down. And our levers of economic, I would say, control are lagging. So when we move a lever, it takes some time. And so it's led to, people questioning, will Switzerland return to a negative interest rate?
Right. And I mean, the interest rate of the Swiss National Bank peaked at 1.75%. And so since then, they came back to 0.25%. So there is basically one interest rate step left where they can go to zero. And after that, they either have to go into negative territory or they have to intervene with with money exchange intervention where they buy foreign currencies to weaken the Swiss franc to help bringing inflation back up a little bit, because a big part of the inflation are imports, and if the Swiss franc becomes too strong, imports will become kind of cheaper, and that has a negative impact on inflation. So products become more affordable to the Swiss population. And then on top of that, next to the strong Swiss franc, we also see the oil price, which has weakened quite a bit. So there has been prices, I think, even below $60 a barrel. Now it's ticking up a little bit again. But that also doesn't really help towards a positive inflation number.
Yeah, and I think the challenge is when you live in a hyperinflation, not hyperinflation is the wrong word. When you live in persistent inflation environments, when you hear about 0% inflation, you think, oh, good. And you said, oh, products might feel cheaper to Swiss people.
Right.
And where people can kind of see that as a relief, it's a double-edged sword. It's a very fine line between the negative impacts. You were talking about the imports. It's cheaper for Swiss people to import things. But adversely, it's more expensive to export goods for other countries to buy goods from Switzerland. And I think that's the challenge that really, it poses risks to the Swiss economy if there is too much strength of the Swiss franc or too much appreciation of the Swiss franc to where the economic activity could slow down, and then things become more challenging. And so that's why they bring up the whole reason for negative interest rates is to try to also have some effect on the economy. Price stability, absolutely, but price stability matters in terms of economic flows in and out.
And I mean, that's also where a lot of economic figures are coming in, where Swiss industries or like the productive part of the where they produce real stuff which they export, that they are not as positive anymore, rather they are quite negative. So there has been hesitation towards employing new people. Unemployment is still low in Switzerland. It has even lowered a little bit. I think it's 2.8%. But when you look forward and when you see how the leaders or the management of companies, how they react, they are quite hesitant to make any big moves, not only because of the strong Swiss franc, which makes exports more expensive for their consumers, but on top of that, we are experiencing the insecurity about the tariffs, which will put extra pressure on the prices. So that would also probably lead to the US situation, because what we have seen with the announcement of the tariffs was also that the US dollar has weakened significantly against the Swiss franc by about 10%. And if you think about it, there is a tariff of 10%, even if it's 10%, and then on the currency side, you have another 10% increase in the price level, that makes it very difficult or challenging to keep up the purchasing power.
Yeah, and to be profitable as it's an importer of Swiss goods, so Switzerland exporting it, but your products to the world,
Right.
if they have a 20% jump, I mean, I'm going to start looking for alternatives because I have margins, and that's one of the challenges that they face. At the other side, I mean, there still is Swiss quality that outshines and is almost unmatched in the world. So there is that benefit to how Switzerland runs and who they are.
Yeah.
But I think the manufacturing, it's not just Switzerland that's kind of, I would say, doesn't have a doomed outlook, but a pessimistic outlook. I mean, Germany's is quite, in terms of their manufacturing sentiment, is challenging. It's ticked up slightly, but it's still quite negative. I mean, you look at consumer sentiment in Switzerland, it's been negative since the pandemic. I think pre-pandemic was the last time it was ever positive. And again, we see a little bit of a trend up of people getting a little bit more optimistic, but still very, very pessimistic in terms of where things are going. I mean, we see that in the US as well. When we see consumer confidence, it's starting to really kind of come back a bit. It's thinking about, how is this going to affect my daily life? And how is this going to affect the purchases I have, the debt level, managing my personal debt level, just excluding the U.S. government debt level. There's a lot of private debt in the U.S.
Yeah, but I also have to say, on the European side, Germany and Switzerland, I mean, the mentality is also more conservative in a way that, I mean, if you ask a Swiss person, how are you doing? I mean, the answer is more, not bad. It's not like it's great. It's like, it's not bad, at least that. So I think that you can't compare it like directly with the US, because the US people are much more positive in general, their mentality. So it's much more optimistic. And then on the other hand, I mean, Europe, in particular Germany, they have struggled the last 3 years. So they have been in a contraction, negative GDP growth for quite some time. So it's quite hard to get out of it, but we do see first signs, and I think the new government and the new chancellor play a big role in that.
Yeah, and that was it's interesting to see the political landscape in Germany in particular.
Right.
I mean, we saw 6 months ago, Trump was elected. On the same day, the German government was put on pause, essentially. And now even their new chancellor,
Friedrich Merz.
Mr. Merz, he had to go through 2 rounds of voting to get the confidence. And so, there is some of this kind of tension in the country, but at the same time, you're talking about a country with healthy debt levels. So they're maybe struggling with their GDP, but they're also not hyperinflating their economy or trying to inflate their economy with just excess spending. Their debt brake has worked well in keeping their debt levels under control. And so, there's still room for them to take action that can really try to help to pull them in the right direction.
That's correct. And Mr. Merz, he's definitely not in a easy environment. I mean, he doesn't really have that much support from his own government. As you said, it needed 2 rounds to be elected. And I mean, the last time that happened was in 1941 or so, so quite a long time. And then on top of that, he has made a U-turn on the debt brake. So that is kind of worrying to a certain extent, but also understanding that there has to be investments, because there was a lack of investments in infrastructure. The former governments, they focused way too much on things that weren't really giving room to prosper for the country. So they have to make this turnaround, and I really hope that they can manage to, even if they spend more right now, that they are coming back at some point and withdraw on that side to lower their debt level again, which is always a challenge. I mean, we have mentioned that before in politics. There is a rule. I mean, there is nothing that is more constant than a temporary measure.
Yeah.
So
Yeah.
let's hope it's not that way. But the 500 billion euros they are going to spend on infrastructure is definitely an encouraging sign also for the consumers in Germany. We also see consumer sentiment is improving in Germany, which is quite different than what we are seeing in the US, for example.
Yeah, and I think those are valuable points to look at in the grand scope of things, especially when you talk about what has Europe, Germany as well, but what have they been doing for the past 20 years? Well, they've been regulating strongly.
Right.
And now they're starting to realize, hey, our regulation has essentially imprisoned where we could grow, or at least put the barriers for growth too close, or they've moved in the field in which their economic activity can roam. And I think, you know, again, Germany being a conservative country, it's not going to be today or tomorrow, but it's going to take some time. But if they can start to trend to try to move those fence posts back, you know, to allow for more economic activity, which conversations are starting to take place about that. You know, there's starting to be this mentality of, okay, we have to think about maybe having regulations that make sense, not just that make us feel good. And I think that's a very important piece of the puzzle.
And one encouraging sign on this side is also that Mr. Merz is including some entrepreneurs into his government. And I think someone coming from practice, like hands-on experience, is very important and, as I said, encouraging.
Yeah, and that will be the navigation on the EU side, not for Switzerland being independent from the EU, but on the EU side, if they can manage to negotiate those regulations through the cross-border issues. I mean, these are really individual countries like the US. They're individual of the states themselves, but there's much more openness between the states. So there's a lot more maneuverability. And where there is a lot of personal maneuverability in the EU, the challenge to go into different markets, the language barriers, there's a lot of things that have to be navigated for that expansion. And so if it can start to trend in the right direction, which, you know, as you mentioned, entrepreneurs coming on, that's always a challenge. You know, I had a conversation with an entrepreneur in the States when I was there recently, and they started businesses in Europe and the US, and they said that's always the challenge in Europe, is making sure that we can get through all of the regulations to expand. And in the US, you can kind of go and try to course correct in the midst. So if the EU can loosen that a bit, make entrepreneurs' lives a bit easier, then a lot of the ideas that are actually being generated in Europe and then scaled in the US will stay in Europe. And I think that could really create a nice potential opportunity for the future.
Yeah, and I think that's also the reason why we reacted the way we did with the tariffs that came in and the uncertainty that was imposed on the global economy in April. So we haven't panicked, we haven't sold. We rather took the opportunity to take on new investments. So that is important for us to not focus on one particular thing, but see, okay, where are the long-term trends? What shifts do we see that will persist over the long term? And then we capitalize on that. And we have seen and experienced during that period of the tariffs being imposed and the other things that were going up on that, especially our clients from the US who have diversified into Europe, into Swiss franc, into euro, and into British pound, and so on, that they have, even though there have been a tick in the stock prices, that the currency appreciation has given them some counterweight, leaving them much better off than what they have experienced with their US portfolios.
Yeah, absolutely. I think that's a great point to close this episode out at. Urs, thank you so much. I appreciate it, and I look forward to the next time we get to talk together.
Likewise.